and gold. This is the three-pronged triple threat attack for investing in a market crash, which we are only just over halfway through this crash. We're looking at two more bottoms before we get to the end of this credit drawdown cycle. So, people say cash is king in a crash. So, if you have cash up here at the top and down here at the bottom, you still have the same amount of cash and you're in a great position to buy the dip here at the bottom of the crash, but you're not making any money on the way down, which a market crash is an excellent opportunity to make money on shorts. So that is the main strategy that people have, is when it's going down, you short down and then hold cash on the way up, or a different long position. Cash is the best long position uh, for a crash usually. And you hold cash on the way up here, right? So this is the gold. This is the gold chart, a Sprott ETF. I recommend against the GLD, XLD. I recommend against the GLD because HSBC is the custodian and they are bankrupt, and the Fed is trying to open euro dollar repo markets to try and bail them out. It's a huge mess. I don't know what's going to happen with that whole situation, but the GLD is very risky. Here's a Sprott physical gold trust, which is much less risky in my opinion. So if we take a look at what the S&P did, here's the S&P dead cat bounce, waterfall down to the first bottom. Then we just ran out into our bull trap now. So the plan would be, I mean, if you can time the top of the bubble, good job. But if you could short on the way down, I mean, you'd make a ton of money. And then most people would try to hold cash on the way up to stay safe, right? And then the next leg down here that we're about to do, you can go short again. But here, if you look at gold, right? Gold, most people think holding gold in a crash is a great idea. So overall, it does kind of come out around even by the end of the crash, because it comes down, it shoots back up, it comes down, it shoots back up. But if you look what's going on here, when the stock market crashes, gold crashes with it. And the reason this happens is because people have to sell their gold to cover their losses, to pay their margin calls, because that is the only liquid they have available. And then after you come off the bottom, gold screams up way higher than the S&P comes back. And then the S&P crashes, it pulls gold down with it again on margin calls, and then it screams back up, all the way back up to where it started. So, I mean, if you just held cash and went long gold on the ups, that's a really safe way to try to get these like 2x kind of gains off of golds on the up legs. If you want to get more aggressive, which is what I'm trying to do, is you short on the way down and you get big gains, and then you don't want to hold cash on the way up. You want to hold gold on the way up and get that 2x gain on the way up, and then you want to get the big short gain on the way down. And then we're going to swing out into another bull trap, and then we're going to go who knows where down to the final bottom. So so right now we're here. We're right at the top of the bull trap, like prime spot to short tech, most likely. My favorite shorts right now are Dell, because they have the worst balance sheet in tech, and Visa, because they have the best balance sheet in tech. So Dell is the most likely to get in trouble and fall farther than the tech XLK ETF would fall. Dell's going to get in more trouble than the ETF is going to get into. So that is a good short. And then Visa and MasterCard and PayPal, I really like, because they're really good companies with really good balance sheets, but they're inside of that Tech XLK ETF, and they're going to get dragged down right down with the ETF, and you can get put options on those for really cheap. So you can get way bigger gains on those when they get pulled down, just because the put options are so cheap. Um, So that's my basic plan. I have lots of other short ideas, but those are my top two, is Dell and Visa right here on the way down. And this is going to be, let's see, this is a 1 month bounce, and we are not quite 3 weeks in. So this is going to be 8 or 9 days on the way down here. And the bottom should be right around the same bottom that it hit last time. That's what I'm looking for. It could go lower, but just like a general idea on this short, I have more detailed videos on the dates and everything on this. But that's just the general idea for cash when you don't want to be risky, shorts when you want to be very risky on the way down, and gold is not so risky and you can get bigger gains on the way up. So that's the strategy. If you can figure out when to get in and get out, you can do really well navigating this market crash. So this is a 3 month crash. 1 month was the bottom. We're going to hit the next bottom soon at the end of the second month here. And then we got another leg down to go. So uh, good luck trading out there. This is not investment advice. Please smash the like button and maybe subscribe to help me out with the YouTube algorithm. And happy trading.